Welcome to Tax Teach. I hope you're all having a great day. My name's Sean. Today I want to talk about 5 common tax return mistakes people make when they're preparing their tax return. It's that time of year, so people are starting to get ready, getting all their tax documents and whatnot. And I think just going over these 5 items might help people as they go through the tax season. So without further ado, let's get into 5 common tax mistakes people might make when they're preparing their tax return. Now, the first mistake people make when they're preparing their return is forgetting when it's due. Usually the tax return is due on April 15th, but this year there is a Washington, D.C. holiday, so now it's April 18th for most states. If you live in Maine or Massachusetts, it's pushed even further to April 19th. I know people are living busy lives and tax returns isn't always on someone's mind, so months kind of pass by. And just remember that April 18th this year for most states is the due date for your tax return. If you forget to prepare your tax return, there might be penalties and interest put on that you owe to the IRS, and you don't want that to happen. If it comes down to April 18th and you're not quite done with your tax return, you can always extend it using Form 4868 for another 6 months to October 17th. But don't forget, you still have to pay your taxes. I have another video going over when the tax returns are due. A box should be popping up now. You can click on if you're interested in that. So that's the first mistake people make when they're preparing their tax returns, just missing the due date. The second mistake a lot of people make is not including all the tax forms that need to be included when you submit your tax return. A common one is Form W-2. This is a form you receive from your employer when you're working for a company. If you mail your tax return in, you're going to have to include a copy of your Form W-2 in the mailing package. Just keep in mind when you're filing your tax return, there's a variety of different tax forms you need to include depending on your circumstances and facts. Just keep that in mind this tax filing season to make sure you include all the forms like Form W-2 and other forms that you might be required to submit with your tax return. A third mistake people make is choosing the wrong filing status for their tax return. Now, why this matters is depending on what filing status you are, it determines how much you get for your standard deduction. I have a whole video going over what filing status might apply to you, and an icon should be popping up now where you can click and look on that video. But I'll give you an example of why it's important to have the right filing status. Let's say you're single, you don't have any kids or anything, so you'd file under the single filing status. You would get a $12,550 standard deduction. If you incorrectly put head of household for your filing status, you would get an $18,800 standard deduction. That's above a $5,000 difference, but you can get in trouble with the IRS for choosing the wrong filing status, and you can get penalties and interest and whatnot. And the opposite is true as well. Let's say you have a kid or maybe a different dependent that you have, and therefore you qualify as head of household, but you just file as single. You're missing out on a larger standard deduction where you can save more on your taxes. So this tax season, make sure that you're filing the right filing status for you and your circumstances, because you could either be missing out on a larger standard deduction or maybe have too much of a standard deduction and could get in trouble with the IRS. So keep that in mind this tax season. Fourth mistake a lot of people make when they're preparing their tax return is automatically going with the standard deduction. Standard deduction for 2021 is $12,550, which is a sizable amount, but you should always consider itemizing your deductions for the tax year. A very common itemized deduction is the mortgage interest on your house. So if you have a house, you should always consider maybe going through itemized deductions because it can be larger than your standard deduction. A couple other things are included under itemized deductions. Schedule A in your Form 1040 goes over a couple of those. A couple common ones are giving to charity. There's medical and dental expenses. There is, like I said earlier, mortgage interest. Keep in mind this tax season, you don't always have to go with your standard deduction. Maybe you want to go with itemized deduction this year because you might have a bigger benefit and lower your taxes owed to the IRS this year. The fifth common mistake that some people might make when they're preparing their tax return is incorrectly listing dependents on their tax return. And why this matters is depending on how many dependents you have, what their age is, what kind of dependent they are, you're entitled to some tax credits to help you reduce your tax liability. A common tax credit is your child tax credit and dependent tax credit. If you have a child who is 5 or younger, you might be entitled to a $3,600 tax credit. If that child is between the ages of 6 and 17, you might have a $3,000 tax credit. For 2021, in prior years, that credit was around $2,000, but since the pandemic, that tax credit has increased. If you're just taking care of a dependent, so a very common example of this is a parent, you're entitled possibly to a $500 tax credit. This all depends on how much money you make throughout the year. If you make above a certain threshold, you're not entitled to these tax credits. Conversely, people sometimes list too many dependents on their tax return and therefore lowering their tax liability when they shouldn't be. If the IRS figures this out, they might hit you with some penalties and interest. So it's important to get the right amount of dependents on your tax return to help make sure your tax liability is correct, whether it be a lower tax liability or a higher. Just a common mistake people make when they're preparing their tax returns is either listing too few dependents or too many. And if you have questions about this, I recommend you talking to a CPA or tax advisor and letting them know the people you take care of and whether or not you might be entitled to a tax credit. So those are the 5 common tax mistakes people make when they're preparing their tax return. And just to go over those, we have missing the filing deadline for their tax return. There is not including all the tax reforms with your tax return when you submit it to the IRS. 3 is having the incorrect filing status for your facts and circumstances. 4 is going with the standard deduction when in reality the itemized deduction could be a better deduction for you. And 5th is incorrectly putting dependents on your return, whether that be underreporting or overreporting, and how that affects your tax liability. Hopefully you all enjoyed the video. If you found the video helpful and informative, hit the like button. It lets me know that I'm making good videos for you all. Also, if you enjoyed the video, hit the subscribe button. It keeps you up to date on videos I post in the future, and it's free. And with that, I appreciate y'all watching the video, and I'll see you next video.